Friday morning, coffee in your hand. The week is almost over. Your kids are grabbing their backpacks, arguing about something small, laughing about something smaller. The house is warm. Life is good. You have worked hard for this moment, this ordinary, peaceful, beautiful moment, and you deserve every second of it. Then your phone buzzes. You glance down expecting a text from a friend, maybe a reminder from your calendar. Instead, it is an email from the IRS. Subject line, notice of penalty. Unreported foreign financial account. Your coffee goes cold. Your chest tightens. You read it again because surely this is a mistake. Surely this is meant for someone else. Surely not you. You scroll down with shaking fingers, and then you see the number, 16536. You did not steal anything. You did not lie on purpose. You did not move money secretly or hide wealth in some offshore scheme. You just had a savings account back home. Maybe your mother's name was also on it. Maybe you opened it years ago before you even knew you would end up building your life in America. You forgot about it. It felt irrelevant. You never imagined that a simple account sitting quietly in Pakistan or India or Nigeria or Mexico could reach across the ocean and threaten everything you have spent years building here. But it can, and right now it is. Most immigrants facing this exact moment make one of two costly mistakes. They freeze and do nothing, hoping the problem quietly disappears on its own, or they panic and immediately pay whatever number the IRS puts in front of them, never realizing they may have rights, options, and legal protections they never knew existed. You are not going to make either of those mistakes. Because in the next few minutes, I am going to give you the exact knowledge, the exact steps, and the exact words that could save you from a 16,530 Scarden penalty, protect your immigration status, and keep your citizenship dream alive. Stay with me. This is the most important thing you will hear all week. The trap. Why 90% of immigrants get caught. Let me tell you something. The IRS is actively counting on you not knowing. They are counting on your silence. They are counting on the fact that nobody explained these rules to you when you arrived, that you assumed, the way most decent, hardworking immigrants naturally do, that your bank account back home is your private business. That money sitting in Lahore or Chennai or Lagos is between you and your family. That what crosses borders in the form of love and sacrifice and remittance is no concern of the American government. That assumption is quietly costing immigrants millions of dollars every single year. Here is the trap. And it does not have one layer, it has three. Layer one, the $10,000 misunderstanding. Most people hear the number $10,000 and feel safe. They think, I do not have that kind of money sitting in one foreign account, so this rule does not apply to me. That thinking is exactly wrong, and it is exactly what the IRS is counting on. The rule is not about how much money you have in a single account right now. The rule is about the highest combined total balance across every foreign financial account you hold at any single moment during the entire calendar year. Read that again slowly, because the word combined changes everything. If you have a savings account back home with $4,000, a checking account with $3,500, and a family insurance policy with a cash value of $3,000, that is $10,500 combined. Even if those balances only aligned for a single day back in January. Even if by December every one of those accounts was completely empty. For that one day, you crossed the threshold, and the law required you to report it. If you did not, the IRS may already be aware, and they are waiting to see what you do next. Layer 2. The AI is already watching. In 2026, the IRS did not expand its workforce to catch more people. They did something far more powerful and far more precise. They deployed artificial intelligence systems to automatically cross-reference foreign banking data on a global scale. And they are not doing this alone. Under a sweeping international agreement called FATCA, the Foreign Account Tax Compliance Act, financial institutions in over 100 countries are now legally required to report your account information directly to the U.S. government. Your bank in Karachi, your account in Hyderabad, your savings institution in Accra or Lagos or Mexico City. Every one of them is already sending your data to American authorities, quietly, automatically, without notifying you and without your consent. So when someone tells you the IRS will never find out about that account, understand this clearly. They very likely already have. The IRS is not searching for you. They are simply waiting to see whether you come forward honestly or whether you force them to come to you. That distinction, who moves first, is worth tens of thousands of dollars and possibly your immigration future. Layer 3, the citizenship killer. This is the layer that carries the most devastating consequences and the one I want you to take most seriously. When you file Form N-400, your application for United States citizenship, you are required to demonstrate what the law calls good moral character. During your interview, a federal officer will look you in the eyes and ask you directly, have you ever failed to file a required tax return or report a required foreign financial account? If you have an unreported foreign account and you answer no to that question, you have just made a false statement under federal oath. That is no longer a tax issue. That is a federal integrity issue. It can result in permanent denial of your citizenship application. In serious cases, it can put your green card itself at risk. It becomes part of your permanent immigration record. The trap is not just about money. It is legal. It is immigration. It is the life you are trying to build. And most immigrants walk directly into it, not because they are dishonest, but because no one ever sat them down and explained how any of this works. Consider this your explanation. The legal shield, the laws that protect you and require you. Now, let us talk about your protection. There are two primary laws you need to understand, and the best way to think about them is as two legal shields, but these shields only protect you if you know they exist and you use them before it is too late. Shield 1. FBAR, FinCEN Form 114. FBAR stands for Foreign Bank Account Report. It is filed through the Financial Crimes Enforcement Network, known as FinCEN. The rule is this. If the combined total of all your foreign financial accounts reached or exceeded $10,000 at any single point during 2025, you are legally required to file FinCEN Form 114 by April 15, 2026. There is an automatic extension available to October 15, 2026, and you do not have to request it. It applies to everyone. What counts as a foreign financial account under this rule? The list is broader than most people expect. Savings accounts, checking accounts, joint accounts even if a parent or sibling is listed as a co-owner, foreign insurance policies that carry a cash surrender value, mutual funds and investment accounts held at foreign banks. If your name is connected to it in any meaningful way, it likely counts. The penalty structure is serious. For a non-willful violation, meaning an honest mistake made without intent to hide anything, the fine can reach up to $10,000 per violation. For a willful violation, meaning the government believes you deliberately concealed the account, the penalty jumps to $100,000 or 50% of the account balance, whichever number is higher. Criminal prosecution also becomes a real possibility. But here is where the protection lives. If you come forward on your own, before the IRS initiates contact, you can access a program called the Streamlined Filing Compliance Procedure. This program was specifically designed for people who made honest mistakes and want to correct them. For U.S. residents, the penalty under this program is typically around 5% of your highest account balance. For people living abroad, it can be reduced to 0. Coming forward first is not just better. In some cases, it is the difference between a manageable correction and financial devastation. Shield 2, Form 8938, FATCA reporting. This form is filed alongside your regular federal tax return, Form 1040, and it covers a broader range of foreign assets beyond just bank accounts. The reporting thresholds are higher here. If you are a single filer living in the United States, you must include Form 8938 if your total foreign financial assets exceeded $50,000 on the final day of the year, or $75,000 at any point throughout the year. For married couples filing jointly, those thresholds are $100,000 and $150,000 respectively. It is important to understand that FBAR and Form 8938 are not duplicates of each other. FBAR focuses specifically on foreign financial accounts. Form 8938 covers a wider landscape that includes foreign stocks, ownership interests in foreign businesses, and other foreign financial instruments. In many cases, you are legally required to file both, and filing one does not satisfy your obligation to file the other. There is also one more principle that every green card holder and U.S. citizen must fully understand. The United States taxes worldwide income. Interest your foreign savings account earned in 2025 is taxable income in the U.S. Rent you collected from property you own back home is taxable income in the U.S. Profits from a business partnership in your home country are taxable income in the U.S. You may also owe taxes in your country of origin, but the U.S. maintains tax treaties with dozens of nations and offers a foreign tax credit through Form 1116, specifically to prevent you from being taxed twice on the same earnings. A qualified international tax professional can use these tools to reduce what you owe dramatically. The action plan, your step-by-step game plan right now. Enough background. Here's exactly what you need to do starting today. Step 1. Do the math tonight, not this weekend, tonight. Sit down with a pen and paper and write down every single financial account you have outside the United States. Savings accounts, checking accounts, joint accounts, insurance policies with cash value. Any account where your name appears as an owner or signatory, even if you never actively used it, even if the funds technically belong to someone else. Once you have that complete list, calculate the highest combined total those accounts reached at any single point during 2025. If that number touched $10,000, even briefly, mark your calendar right now. April 15th, 2026 is your FBAR deadline, with an automatic extension to October 15th, 2026. Step 2. Check whether Form 8938 applies to you. Look at the total value of all your foreign assets, not just bank balances, but investment holdings, property ownership interests, and business stakes. Single filer. Did the value exceed $50,000? Married filer. Did it exceed $100,000? If yes, Form 8938 must accompany your tax return this year. Do not file without it. Step 3. Report every dollar of foreign income. Go through your records carefully. Did any foreign account generate interest income in 2025? Did you receive rent from property abroad? Did a business back home distribute profits to you? All of that income belongs on your U.S. federal tax return. Work with a CPA who has specific experience in international taxation and ask them directly about Form 1116, the foreign tax credit, to make sure you are not paying taxes twice on money you already paid taxes on somewhere else. Step 4. If you are already behind, move immediately. Do not wait. Do not hope this resolves itself. Go directly to the IRS website and search for the streamlined filing compliance procedure. Read it carefully. This program exists for exactly your situation, for people who missed filings due to honest oversight and want to make it right. It offers dramatically reduced penalties and, in some cases, complete penalty elimination. But the critical requirement is that you must initiate the process voluntarily before the IRS sends you a formal notice. Once they reach out to you first, the streamlined program is no longer available. That window closes permanently. Step 5. If you are pursuing citizenship, handle this before anything else. Before you submit Form N-400, sit down with a qualified immigration attorney and review your entire tax history. Confirm that every required FBAR has been filed for every applicable year. Confirm that all foreign income has been properly reported. The officer assigned to your citizenship interview has access to IRS records. If what you state on your application does not align with what those records show, you will face delays at minimum and permanent denial at worst. Fix the discrepancy now, quietly and legally, before it becomes a problem that follows you for the rest of your life. The 3 things to remember. Write these down somewhere you will see them. 1. $10,000 combined. Any moment during the year means you must file. 2. Coming forward first before IRS contact reduces your penalties dramatically, sometimes to 0. 3. An unreported foreign account can permanently destroy your citizenship application. 3 rules. They could save you 16,536. They could save your green card. They could save your entire future in this country. You are not a criminal. You are prepared. Before we finish, I need you to hear something important. Having a bank account in your home country does not make you a criminal. Sending money to your parents every month does not make you a criminal. Owning a piece of land or a small flat back home does not make you a criminal. Supporting your family across 2 continents while building a life in America is not something you should ever feel ashamed of. Not reporting it, that is the only problem. And now, unlike the millions of immigrants who will receive that same IRS notice completely blindsided, you know exactly what the problem is and exactly how to fix it. The immigrants who lose everything to these penalties are not dishonest people. They are people exactly like you. People who worked double shifts and saved carefully and dreamed of something better for their children. People who simply never had someone explain these rules to them in plain language. The IRS does not consider your intentions, it only considers your actions. And your action, starting today, is to get into compliance. File your FBAR. Attach Form 8938 if required. Report your foreign income. Use the streamlined procedure to correct past mistakes if needed. And if your citizenship interview is on the horizon, walk in with a tax record so clean there is nothing left to question. Knowledge is your legal shield, and now you have it. Now, do one thing for me before you put your phone down. Send this video to one person right now, a family member, a close friend, someone in your community group, someone who immigrated recently and has no idea these rules even exist. Someone who has a savings account back home just sitting there, quietly accumulating liability they do not even know about. This information is completely free. But the penalty for not having it is 16,536 or more. Subscribe for weekly immigration and tax updates. Every week, we bring you the legal situations that are quietly trapping immigrants across this country, so you are never the one caught off guard. So you are always the one who is prepared. You worked too hard to lose it all over paperwork. We are here to make absolutely sure you never do.